Go ahead, Sonny.
The last of it. And I have a question which I would like to give some money to my children to open a brokerage account to invest it. And my question is, how do those brokerage income should report it on their individual tax return, or have to go to mine, or just forget it if a too small amount of revenue from those brokerage accounts?
So you want to give your kids money to set up a brokerage account?
Correct.
And then what?
And then how, when they receive the, let's say, dividend or capital gain from those brokerage accounts, how those income reported?
Well, if it's reported, if they're adults, it gets reported on their taxable income. If it's on you, it gets reported on your income if they're minors, because there's something called the kiddie tax if it's above a certain amount. Do you know what it is or no? Do you know how it will be taxed? The other thing you could look at is creating a Roth for them. That way the income grows tax-free. And you could call our office at 888-988-JOSH for help on that. Any other questions?
No, they didn't work for, they don't earn income.
What's their age though?
They're still students.
What is their age?
19 and 14.
Okay, well then you have to watch out for the kiddie tax. And the income could be reported on your tax return. So if you're doing something specifically for them, you want to, you basically want to take those assets and buy things that do not pay a dividend. That way you're not taxed on your return for dividend income, and you're only taxed when they sell it. You can create an UGMA, you can create an UTMA. Do you own your own business or no?
No.
If you own your own business, you could have them work for you, pay them a wage, and have them create a Roth. So there's a lot of options for you. Look at stocks that don't pay a dividend. Look at cash value insurance. That also would not trigger any taxation for you. You could also do what's called an investment-only variable annuity, whereby, now I'm not talking about a loaded annuity with a lot of fees. I'm talking about a very at cost, very cheap annuity, where they charge you like $20 a month for the internal costs, and that would grow tax deferred. So that would not hurt your taxable income, the growth and the gains and the interest and dividends and all that stuff. So what other questions do you have?
No, is an annuity on the kids or on the children, or annuity on myself?
You could do both. Probably if the goal is to give it to them, put it on their life though. And the beauty of that is, let's say you want to buy an index fund or a high growth mutual fund. All of the dividends that you would get would not flow to your return. They would build tax deferred, and then they could sell it when they're older, and then it would go against their taxes. Does that make sense?
Right.
So you have a lot of options. You could choose no load annuities. You could choose cash value insurance. You could choose stocks that don't pay a dividend. You could choose ETFs that don't pay a dividend, and the like. So give us a call, 888-988-JOSH. We'd love to help you get your retirement reality check. We'll be back after these messages.
The preceding program was sponsored by the Jalinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.